This week, we're going to continue what has unintentionally become an Investing Legends series here in the weekly commentaries, looking at some quotes and misconceptions around those quotes from the likes of the legendary Warren Buffett. So Warren Buffett is undoubtedly an icon of investing, perhaps the icon of American investing. And this week, I want to take a look at some of his famous quotes dealing with some big subject matters that are important to investors, the misconceptions around them, using the context of what's going on in his world right now, and came out within the Berkshire Hathaway newsletter a few weeks ago to help clear up some of the misconceptions, confusions, to hopefully leave you with a few key takeaways to make you a better investor. Number one is around diversification. A lot of people believe diversification is overrated. They believe they can find a pattern in stocks that they can trade. They believe that if they get too diversified, they can't make any money. And there's a quote from Buffett where he says, diversification is for the ignorant. And that's used by said people to say, see, who's been a more successful investor than Buffett? He believes this as well. The reality, the truth, that's the quote, point two, the truth is Warren Buffett owns over 160 different companies in whole or in part. So Buffett clearly believes in diversification. The takeaways here, I think, again, is number one, you're not necessarily diversified just because you own a bunch of stuff. You need to, and this is the main takeaway, know what you own. Don't just buy indiscriminately. Don't just have a basket of things to have a basket of things. Have things that are, again, mapping to a plan or a purpose. And again, true diversification means they're not going to act all the same. If you look at Buffett's portfolio, and there's plenty of things in there, but he's got railroads, an insurance company, he's got some of Apple, he's got consumer goods and Kraft Heinz foods. So he understands, again, being well diversified, and it's a critical part for any investment portfolio. Again, not a quote to be taken literally. Number two, key point around being a successful investor, and Buffett says this is actually rule number one. I'm burying it in the middle. The rule number one of investing, according to Buffett, is don't lose money. Is it something we should be taking literally or figuratively? Well, I think there's two parts to this. Number one is Buffett certainly understands that losing money is part of the game. He lost 30% shortly after buying Apple. It's a temporary loss. My understanding is he still holds it. He lost $15 billion, 27% off of his holding in Kraft Heinz Foods in a morning 2 weeks ago. But what he's saying here again, and this is key takeaway one of this point, is that you need to minimize your downside. The downside protection is an underrated point to building long-term wealth. Secondly is, around being patient, is don't just buy to buy. Another thing that came out in the recent newsletter is that Buffett and Berkshire Hathaway are currently holding over $120 billion in cash. That's 23% of their market cap sitting in cash. I don't think this is a testimonial to just holding cash to hold cash, but what it is saying is you need to have a plan and map to that plan. If you can't find something that's going to help further that plan in the moment, then wait. Be patient. Whether that's patient to let losses recover, whether that's being patient in deploying cash, that this never losing money concept, again, is around patience and downside protection. Point number three, wealth creation versus outperformance. Buffett's got a favorite quote that says, our favorite holding period is forever. That's in stark contrast to people who on a quarterly, yearly basis are trying to compare themselves to a benchmark. The truth of the matter is Berkshire Hathaway hasn't outperformed the S&P 500 over the last 10 years. There's been periods where it has, periods before that 10-year period where it has. But my guess is you sat down with Buffett and asked him about how he feels about himself vis-a-vis the S&P 500. He'd look at you like you were crazy because he understands the singular indices, whether that's the S&P 500 or cash or treasury bonds, isn't what his plan's about. He's got a plan around building wealth. He's clearly been very successful at that, irrespective of what the S&P 500 has or hasn't done over any type of time frame. And that, again, is our key takeaway here. You're the benchmark. Your plan's the benchmark. And knowing whether your plan is or isn't working should be viewed within the context of that. Is this furthering your plan? Is this furthering the purpose? Is it living up to the reasons why you put this thing within your portfolio or how you built your portfolio? And that's the answer to that question. So in closing, again, what were our 3 takeaways? Number 1, diversification does work. Buffett himself is very well diversified. It's an important part of protecting against losses. But know what you own. And point number 2, be patient. Be patient in deploying cash. Be patient with the choices that you've made of the things. Give them time to work. Ride through that volatility. If there's a singular thing that Buffett's been about, it's certainly been about patience. And point number 3 about wealth creation versus outperformance. What you want to outperform is your own expectations. What you want to benchmark to is your plan. And if you look at Buffett and how he's built his companies, it's not meant to try to mirror an indices or outperform a certain indices. It's really about generating long-term wealth over time. If you listen to the man today, he still sees a lot of opportunities, yet he's not indiscriminately buying, both here within the American markets, as well as some more positive and constructive comments around seeing values overseas. Hope you take these truths, think about them with respect to your own plan, your own portfolio, and as always, thank you for joining us. Speaking about joining us, 2 weeks from today is our March Madness video. We're not including it in all of our commentaries. It is an invite thing, but if you're watching still in this video, whether you're a client or not, you're most invited. Please reach out. We'd love to get you on the list and have you join us at the Globe 2 weeks from today for some great food, some drinks, and of course, a lot of great basketball and conversation. Thanks so much.